All right, all right. Happy hump day. Let's get right to it. We're looking at the futures. Actually, first of all, let's see what's going on in the snooze today. What are we looking at? Durable goods orders is really what we want to take a look at. They're looking at a rise of 0.4%. So, how do we interpret it? I mean, it depends on what the mood is or where the market's trading. Market's down right now, so I guess we're going to get a lot of naysayers saying that the economy's slowing, um, based on this number. If the market was up, then we'll get a bunch of people out there saying that it looks like recession is tipping, and the interest rates are having an effect. So really, you could interpret it either way. If you ask me, as far as effect on the market. My personal view, long term, it's good to see everything slow down. It's having the effect that the Fed wants. Just a little slowdown is fine, man. It's fine. A little crouch before the leap. And we could take it. The big number is going to be the FOMC meetings. We could also look at the oil and gas stocks. It'd be nice to see gas stocks improve a little bit. Ease up on the on the pumps a little. Um, it's amazing, really amazing. We could watch refinery also. That'll give us an indication of what's going to go on at the pumps. And again, we could use to ease up because really that's just hurting people. It's not it's not helping our supply issues. So I don't know, man. Unless they see something I don't. I mean, you're not making more product by slowing down the purchase of necessities, and that's what you're doing. You raise those gas prices, and people are buying less food and things like that, and that's where it's hitting. It's not slowing down wealthy who could go out and party and just eat it. So the wealthy are saving less because gas is expensive, but the average individual is eating less because gas is expensive, or being more conservative, or eating off brand, or things like that. So the necessities are getting hit for the majority of the country, which is just pain and suffering. I don't think it's necessary. Um, yeah, they need to do something to get those gas prices down. This is a matter of working people. Okay, so anyway, looking at the market, it's just a consolidation, man. I mean, I'm neutral. I have no idea. I think people, I hate saying it because every time I say it, I expect the market to be flat. The market should be flat because everybody's waiting on the Fed, and then we're going to have the reaction. I mean, that's a normal behavior. Right now, it's light volume, and the market is really subjective to the movements of some big money, and they can push it around because there's light volume. And I think that's really what's going on over here. And yesterday's price action kind of told me that. We had that really nice up day on Monday. We had that that sell off and a break of Monday's low, and then a push back on that, which meant that the bears couldn't really get footing. But why couldn't they get footing? Probably because they don't want to commit before the minutes. So, but the Bulls don't want to commit really before the minutes either, and that's why I think that the Bears might have gained that little bit of leverage yesterday. But I don't know. I mean, the minutes aren't going to tell us anything new, but it's a matter of what the talking heads are going to focus on, and any bad news they're going to focus on. And I'm afraid that everybody's trying to get this market down to 3,500, 3,400. So we need some reasons to buy. I mean, I like products. I like what Amazon's doing. I like what Google's doing. I think going forward, they're going to look really good. Amazon took a beating the other day because of Snap, and they're in the advertisement arena. But Amazon already took a beating on its business model, so good value, man. Yesterday's move in Amazon added a premium to your profits if you're buying this long term. I think that that move yesterday made it overdone. So I like it there. All right, but I digress. I'm just here for the technical shit. All right, and I'm looking at the 240s. Yeah, I'm just neutral. I mean, the momentum's trading trending up. Looks like we might be sweeping into a bottom over here. These are the futures. Can't really argue a inverted head and shoulders, just kind of a consolidation, man. I mean, I'm going to stay neutral between this low and this high on the futures. Let's see how that translates into the S&P and take a look, see what we see in the S&P. So, if you look at the daily on the S&P, there are a lot of bottoming tails on this move. You know, um, that's encouraging to me. There are a lot of bottoming tails showing me that this region right here is kind of back off region, and I like that. And these previous gaps, that's what these lines represent. These are the gaps from back in the day, and the market. I knew the market was heading to close and fill those gaps, and gaps are important regions or areas. There was strength there and bottom, and we're just kind of mulling around and working in those gaps right now. These green lines are gaps going forward that I think we're going to fill once we can get a little rally going. And I think through the summer we're going to see the 4,400. That's not to say things aren't going to turn around again, but I think that once the pressure comes off and people chill out on the market a little bit and grow a little bored, the market's going to float up there a little. And then, based on going forward numbers, we might see sell off going forward again. So these are all newly formed theories as we speak, or just how I feel or read the chart. So, but on a technical basis, I really have nothing going on. I mean, this is that's a cool bar, but we're in a consolidation phase right now. We have to see what our reaction is. If we look at the 120, I'm not seeing anything, man. I'm just, I'm just considering that the 809.11 as support, and just really nothing. I mean, if we break this high, 981, we have a nice run up. We might close up that gap to 4086. That would be nice. I'm not saying that's one day's move. That's quite a move, but that might be what we start working ourselves to. I mean, this is. It looks like we closed up this gap right here, and that's what the move was yesterday, to close up that gap. We still have the other gap. We got a low, we got a higher high, right? We have this trend right here. We have a higher low. If we break this, we make a higher high. Could be an indication of a trend reversal. The momentum looks good for the trend reversal, but I'm going to have to wait for the break of this high to kind of invest in that concept a little bit. The 30s just looks like it closed the gap. Got ready for today. I don't know, man. I don't know. I mean, we just keep getting slammed. Market looks a little encouraging. Bounces back. We get slammed down again. And the theory right now is sell the rip. Sell the rip, sell the rip, sell the rip. Let's see what TNT left us for the day. Got a decent head and shoulders building that broke, and I'm looking for like a 24 range on TNT. So it's like 2.4 on the 10-year. That is very good, very good, very good. And cool enough, we talked about TBT. Figure we got it between 15 and 17 if you guys started listening to me back in the day. When as high as around 27 or so. Actually maybe higher. And I sold the 27 calls like a month out, and I got a buck on them. It was pretty sweet. The high was 27.73. So I sold the 27 calls, got a buck on them. So I picked up $1 a share on that. They expire first week in June, and it's just a little extra income into the portfolio. So that was a a sweet move. Let's see Bitcoin beating the hell out of us. Bitcoin. Look at that. It's green too, huh? So it's just consolidating. There's not much more you could say. It's just giving us that consolidation. So I'm neutral on it. Really no pattern setting up. It's just doing the high low thing. Actually, I'd rather look at BTC on a 240 chart. I mean, it's just building this channel right here. And you could play a break of the channel in either direction, really. That's probably the move I would look. And this is a 240 chart, so you got to look at this as a swing trade. But, yeah, I like this. I might trade this break. Momentum's getting kind of flat. But it's a nice consolidation, so it's going to move one way or the other. You get a nice gap up here around 36, 35. That usually just attracts markets. We get a few good ideas or a little bit of good news, and off we go. All right, I'm back. Put it on a little pause and just check something out. So anyway, that's what I'm looking at Bitcoin. Um, yeah, that's all I'm going to really look at. Here's a picture of the Dow. I mean, it's still in a downtrend. There's nothing. I mean, here's the 240 getting higher highs, lower highs, lower lows. That's a downtrend. Here's the daily, lower highs, lower lows. We're in a downtrend. But it's a reasonable move. I mean, at this point, I mean, this is even the Dow. We'll throw a fib on it. That's good enough. I mean, we did a 33% retrace, from the lows of 320, and that's cool. I mean, a 50% retrace will put us back in this trend, and that's very possible. That's very possible that could happen. Um, but a 38%, well, we didn't even get there. We got 33, 38, more common. 33 usually works to make a double top, but we bounced off of the 23 and we show our double top. So I mean, man, this is a good retrace. If I was a trader, I'd be looking for that 55% retrace on the Dow. Puts us right in this healthy progressive area right here, instead of this absurd rebound that we had after COVID. Hey, we might have another 2,000 at least in the Dow. Hard to figure. Hard to figure. Anyway, just buckle up, stay strong, reduce your risk by reducing your leverage. Hopefully, nobody's leveraged up, and you'll get through this. So, subscribe, hit the bell, hit the like. It'll make Dave happy, and I'll catch you later.